know me, I am an AVP Senior Credit Analyst with River City Bank. I manage a commercial loan portfolio and have been heavily involved in the bank's efforts on the PPP program and helping our community. I'm joined today with Ben Brown. Ben?
Hi, everybody. Ben Brown. As Stella mentioned, I'm the managing partner here at BFBA, and we've been working with many of our clients on reaching out to encourage them to participate in this program and helping them through the questions. And we're going to try to answer a bunch of your questions today.
Yeah, so moving on, it's important to note that this webinar is for educational purposes only. We have our standard disclaimers here. I would advise you to consult with your existing advisors on some of the details here. And along with that, the SBA has been issuing evolving guidance throughout the course of the PPP program. Ben and I had a discussion around the timing of this webinar, and we were balancing two competing forces. The first being that we don't yet have updated detailed guidance from the SBA on the forgiveness section of the PPP program, but at the same time, many businesses have already taken PPP funds. The clock has started on their 8-week period to use this money, and they need information on how to use those funds as soon as possible. So what we tried to do was basically give an update based upon the information that's out there today. So some of this could be modified or clarified by subsequent SBA guidance, but because of the urgency, we want to give you what we see as being available information now to help you get started. Anything to add, Ben?
Nope, I think that's spot on.
So to give some background on the process, I would expect that most of your businesses have already secured PPP funding. Most of you know how the process works. So today we're going to jump into how do you use the funds, what qualifies for loan forgiveness, and what is the process to secure loan forgiveness. First off, the most important thing to state is you must use the funds you've taken from the PPP program within the 8-week period beginning on the date of funding of the loan in order for those expenses to qualify for loan forgiveness. In terms of the process, at the end of this period, you will then compile documentation on the use of funds and submit those to your lender. The lender is required to make a decision on the forgiveness calculation within 60 days and then submit that request to the SBA, who then has 90 days to make a decision and remit the money back to the lender. Moving on to what counts as approved uses. So we have a few key categories here, and I think most of you now are likely generally familiar with what you can use this money on. We've gotten a lot of specific questions on the details, and we will be answering a lot of those during this presentation. To give a basic overview, the key components are payroll costs, rent, utilities, and interest. And there's a number of details going along with that. Ben, do you want to jump into some of the details?
I'll jump in here. So one of the things that I want to sort of provide an initial kind of caution to everyone. I'm getting questions from some of our clients that really lean towards very aggressive positions on some of these things. And I think, you know, the SBA has had some rumblings. There's been some rumblings in the media talking about, you know, making certifications in good faith and everything else. And so one of the things that I'm warning people about is don't try to get cute with your costs. A lot of my clients are finding that they're not going to be able to get 100% forgiveness. You know, the way the math works, they're basically giving you a 25% gross up on your monthly payroll costs to cover rent and utilities. And a lot of my clients are figuring out that, hey, I don't spend 25% of my payroll costs on rent and utilities. And I'm getting questions about things like, can I prepay rent for 6 months and things like that. You know, the SBA hasn't given us guidance on it, but I think the spirit of the program is the government wants to give you enough money to cover your payroll, your rent, utilities, for 8 weeks. And we'll get into some of the nuances on a lot of that, but just at a very high level, I would avoid trying to get cute, because if you do get audited, a lot of this good faith presumption, if you're trying to grab every penny and doing things that clearly are not within the spirit of the law, I think you're going to find yourself in trouble. Where, if you do things in good faith and maybe you get 90% forgiveness, that's really, that's fantastic. So getting into some of the details, we got a lot of questions through the registration with a lot of specific questions about these things. So the next slide talks more about the payroll, and we can get into greater detail about what payroll costs are. But rent, right? So what is rent? The bullet point that we've got there is exactly the language that's used in the law. It does not specify it doesn't specify that that's only for real property. So one of the things that I'm recommending is go through and scrub, your files, and as you're cutting checks, make sure you're thinking about, hey, is this under a lease agreement? It's all about, is it under a leasing agreement? And if it is real or personal property, I think it qualifies. And so that's something to have in mind. Other frequent questions we're getting are, what qualifies as utilities? Again, the language that you see on this bullet point on this slide is exactly out of the bill. So clearly, electricity, gas, water, telephone, and internet service qualify as utilities. One of the questions I'm getting is, what about garbage? That certainly seems like a utility to me, but that is not addressed in the bill, and the SBA hasn't given us any further guidance. But I personally think that is likely to qualify, that your garbage expenses. Transportation, that's an interesting question. They've included it in the language. I don't know what that means, and we haven't seen any further guidance on it. I suspect it's, when you think about like the subway or the BART system here in Northern California, or other, bus route systems, that's what I think they're trying to refer to with utilities. If you have an employee benefit where you provide, a monthly bus pass for your employees or something like that, I think that's what they're trying to get at by including transportation there. What I don't think it includes is you having products shipped into and out of your facility. I don't think of that as a utility in any way. Typically, utilities are kind of publicly controlled entities that provide services to the community. A trucking company that drops product off at your facility or hauls it out probably doesn't meet that qualification. I hope we get some additional information about that, but that's as much as we know right now. I also want to talk about interest. So I think this is again, the language that you see there is right out of the bill. And I think it's really important to think, okay, it's got to be a liability of the borrower, and it's mortgage or real personal property. So what is a mortgage? It is when it's debt that is specifically backed by the asset. I think of a car loan as a mortgage on that car. So as you're going through and thinking about what interest is deductible, it's anything that is on debt that is collateralized by a specific asset, whether that's real or personal property. It is not general obligation debt. So interest on your line of credit is not included in this. If you've got a general term loan that's just secured by the assets of the company, I do not believe that is included. But if I've got vehicle loans on my fleet of vehicles and they are secured, I've got a vehicle loan for that vehicle, and I maybe have a half dozen different vehicles, each with a specific loan attached to that vehicle, I think that's a mortgage, and I think the interest on those vehicles is included in the loan forgiveness and approved uses. So those are kind of a lot of the questions we've gotten have surrounded those types of things. Now we can get into the payroll costs. Riley, you want to jump to them?
Yeah, and one more thing to note before we move on.
Yeah.
We have a lot of questions around the percentage of funds that need to be used on payroll. The SBA has explicitly clarified that at least 75% of the funds are to be used on payroll costs. And they've also explicitly clarified that if you are not able to meet this requirement, then the amount of forgiveness will be reduced until you're able to meet that requirement.
And actually,
So,
sorry, I was just looking at my notes as you were talking, Riley. A couple of other things on the utility front, things for folks to be thinking about. Cell phones, reimbursing, your staff for cell phone usage. Perhaps, in the stay-at-home environment, I'm aware of some businesses that are reimbursing employees for internet connectivity. Those are all utilities. And although I'm reimbursing an employee for it, I am in effect paying for telephone and internet access at a remote location. I think that would be included as a reimbursable expense.
yeah, and I think all this should also be taken with the caveat that we need to be on the lookout for updated SBA guidance on these topics, and there may be further clarification to some of these categories.
Absolutely. Okay, so getting into payroll. This is a this is a lot of fun. We've specifically included the language from the current information that we have, but there are a lot of questions about what counts as payroll. Here's the language. There's also quite a bit of Q&A activity on this, on what's going on here. So what we know about payroll is, first, it's going to be limited to no more than $15,385 per employee. And that is based on the $100,000 annual compensation limit divided by 52 weeks to come up with a weekly pay rate for someone who would earn $100,000 multiplied by the 8-week forgiveness period. So know that you will not be able to get credit for any employee greater than $15,385. That's just a sort of a known issue. That is going to be your limit. So a lot of the questions were, well, if I've got excess money, can I pay bonuses to certain employees, or can I pay bonuses to my managers or something like that? We don't have specific guidance on bonus activity, but what I can tell you is, regardless of whether or not bonuses end up being allowed under the guidance from the SBA, if you've got an employee who makes more than $15,385 in the 8-week forgiveness period, that bonus will not be includable anyway. So the payroll costs are basically described as any cash compensation to an employee. It then goes on and talks about payment of vacation and leave and those types of things that would generally also be included wages. But then we talk about employee benefits, including group healthcare coverage, including insurance premiums, retirement, and state and local taxes. We've had a Q&A from the SBA that tells us specifically that FICA and Medicare payments are not a state and local tax, and they are not includable in payroll. But they've actually specifically said that your state disability insurance is a tax. So I think your state unemployment tax and your state disability is included. Big question on workers' comp. Is that an insurance premium that is an employee benefit? And unfortunately, we don't have an answer to that. Anybody that says that they know is is not right. My understanding is there are currently discussions at high levels within the SBA as to whether or not workers' comp insurance is going to be included. I know that's a frustrating answer because for some of our clients, they're almost 3 weeks into their 8-week forgiveness cycle, and we still don't know what is or isn't included. But there you have it. Another issue is we're getting a lot of questions about what payroll period should we be using in this process. We don't know. I suspect, and again, this sort of goes back to what is the underlying principle behind this program. They want us to, or the federal government wants to cover 8 weeks worth of salary for your employees. They want to cover 8 weeks worth of pay. I personally believe that we will end up effectively on a cash basis. And this is Ben Brown's opinion. Don't go quoting me as an insightful source. This is just how I read the bill and everything that I'm seeing. And I think it's going to be based on dates of pay. So if you have payroll twice a month and you pay on April 15th and April 30th, I think you're going to be allowed to capture 4 periods, which will cover 8 weeks of pay. Conceptually, you got funded on April 14th and you pay on the 15th for the 2 weeks ended April 15th. And I've heard the argument that, oh, you're going to have to back out 12/15ths of that or 13/15ths of that. That is possible, but I don't think that's within the spirit of the law, and I don't think that that's what's going to happen. I think the SBA is going to give us some kind of guidance that allows us to capture 8 weeks worth of compensation. There's a whole nother discussion that we'll have here in a little bit later about how all of these things are likely to come down, but that's my take on the pay periods. Riley, you got anything else on payroll that you wanted to talk about?
Yeah, I think one thing to touch on, and I think you just captured the key question of most businesses, is how do we treat the payroll with respect to the 8-week period? And you hear questions again and again on, should we treat it as a cash or accrual basis? Is it when the costs are incurred or when they're paid? In many cases, businesses have a mismatch between the date that those costs were incurred and the date that they're paid out. Additionally, it will be exceedingly difficult for some companies with a large number of employees to separate this out and maybe do a custom payroll run towards the end of the program to ensure compliance if it is required to be done on a cash basis. So I expect almost everyone on this call is concerned about this and looking for additional guidance. And the answer is we just don't have it yet. And like Ben said, we can speculate on what will come down, but we just don't know. And one thing I would say with respect to SBA guidance compared to the original legislation, it has tended to follow a trend of making compliance easier and following logic in most cases. So I would expect, hopefully, that subsequent guidance will make it easier for businesses in America to comply with documentation for payroll costs in respect to the time period that you're using. But again, we don't have the explicit guidance on this yet. And this is actually one of the key questions that we considered when we chose the date of this webinar. I think everyone's waiting for an answer on this, but at the same time, we wanted to make sure that we had some information out there. And so unfortunately today, we're really highlighting that this is something to keep an eye on. We can speculate which way it'll go, but we really do need to pay attention before compiling the ultimate documentation for the PPP program.
Yeah, I absolutely agree with that. And it's really frustrating. One of the reasons we picked this date is under the terms of the law, the SBA had 30 days to provide further guidance on the forgiveness process. That 30 days ended on Sunday. We still don't have the guidance, so they're already overdue. Rumors coming out of the SBA are that we should have additional guidance this week. So who knows, we may have an additional version of this presentation here in another week or two with additional SBA updates.
Yeah, hopefully it comes out soon. So with that, let's jump into loan forgiveness. We have a lot of questions around the exact methodology for how to calculate loan forgiveness. And I would say, based on the legislation, there's two key components that you will use for calculating. So one, and we'll get into some of the details here, but to do a brief overview, you're going to reduce the forgivable amount based on the following calculation. So you'd take the sum of your approved uses of funds and you would multiply that by a fraction, with the numerator being the average number of full-time employees for the 8-week period beginning with loan origination. And you would divide that by, at your option, the average number of full-time employees of the period from February 15th to June 30th, 2019, or the average number of full-time employees per month from January 1st, 2020 to February 29th, 2020. So this is a key difference where you would essentially be comparing to the same period of last year or the period before the program started. The difference here for seasonal employers would be that you would calculate it for the average number of full-time employees for the February 15th to June 30th period of 2019. Another important thing to consider is you're also required to maintain certain salary levels of employees that make $100,000 per year at an annualized rate based on monthly wages. So essentially, you need to meet both of these requirements to ensure full loan forgiveness. There's one caveat in addition to this, which has to do with you may still be eligible to receive full loan forgiveness for the sum of approved funds you've used, if you rehire the employees that you have terminated or that have reduced your full-time employee count by June 30th, 2020. But I would say with that, it's relatively complicated in terms of the language of the act. I would expect subsequent clarification from the SBA on how that will be treated, but it's difficult to rely on that now. So I would say it's definitely something that you need to consider when you look at how to comply with this program. You need to focus on your full-time employees. You need to focus on the dates that will be used in the loan forgiveness calculation.
Yeah, I absolutely agree with that. And I'll just point out, make sure you do the math, even if you think you know the number. I've worked with a number of different clients that have been surprised that sort of anecdotally they thought, oh, no, our headcount's definitely lower in this period or that period, so we're only going to do the math. And then have done the math for both periods and been surprised to learn that their average FTEs were lower in a period other than the one they expected. So do the math for both periods, make sure you've done the calculations, and then, project out over your future pay periods of who's going to be working, how many hours, and what you want to accomplish is a 1-to-1 ratio between your forgiveness period and your base period, so that you can get 100% forgiveness of the approved funds that you use.
Yeah, exactly.
Another question that has come up frequently is, how do we calculate FTEs? The SBA hasn't given us any guidance on that, but the SBA did provide explicit guidance on FTE calculations for the Affordable Cares Act in the shared employer responsibility requirement of 50 or more employees to be part of that back in 2014. In that instance, the SBA defined a full-time employee as an employee who works on average 30 or more hours a week. I know a lot of us tend to think of full-time as 40 or more hours a week, but that's how the SBA defined it in the shared employer responsibility portion of the ACA program. So that's a data point. Given that was a data point a few years ago, I expect that they may provide additional guidance telling us that it's a 30-hour period. But that, the other thing that I'll say is it's all about consistency as well. When you're doing your base period calculation and your forgiveness period calculation, obviously you're going to use the same math in calculating what your FTEs are. And you'll want to, so hopefully it's not a huge difference if you use 30 hours a week versus 40 hours a week and running those calculations.
Yeah, completely agree. And I can't stress enough, this is something that you should look at now because you're basing the calculation on the average during the 8-week period. And so you really need to be considering, if you've laid people off or if you've furloughed employees, what you're going to do in order to make sure that you maximize loan forgiveness. And we see this across industries too. Some businesses will ask questions along the lines of, well, what if we're closed for this entire 8-week period? How are we supposed to rehire people? And I think the spirit of this program is to provide businesses money that's forgivable to pay their employees and keep their salaries at the same levels. And so even if your employees may not be working, if you're following the language of the act, which is to pay them and maintain their salaries, you're still able to get forgiveness for these funds. At the same time, if you determine that it may be more beneficial for your business to remain closed, or say you're unable to rehire some of these employees or other employees, it's still very low cost working capital. You would just be required to repay a portion of these funds at the end, depending upon the ultimate loan forgiveness calculation. So Ben, let's move on to some of the certifications. And we've had some conversations about this, and particularly last night, Stephen Mnuchin made some statements with respect to the necessity for companies to access this program. One of the key phrases that is included in the SBA application for the PPP program is that current economic uncertainty makes this loan necessary to support the ongoing operation of the applicant. This has been stressed very heavily, and we've thought from the beginning that this statement is incredibly vague, right? It's very difficult to pin down quantitatively what does this uncertainty need to look like to make accessing this program necessary. And so Ben, I think, may have some recommendations on some practical ways to approach that.
Yeah. So this is one of those things that's personally very frustrating. You know, the reality is these loans are going to small businesses, and you've got a few situations that just are getting pulled out into the media. The Lakers got a loan, Shake Shack got a loan for $10 million, and then did a $150 million stock offering in the market. You know, Ruth's Chris, big names that we all recognize, and you've got all these little mom and pop businesses that are going, wait a minute, I couldn't get a loan. How come the Lakers got a loan? And so there was an opinion piece in the Wall Street Journal today about this, you know, making a big argument that, you know, you shouldn't take this loan and it's only for small businesses, and shame on all of you that got loans, essentially. There was another opinion piece in the Wall Street Journal about a week ago, it was right around the time the funds of the first round ran out. And it was actually the Republican senator for Wisconsin making an argument that this forgiveness thing is a huge mistake, and he was going to come up with a bill that made loan forgiveness tied to your reduction in top line revenue during 2020 or 2020 compared to 2019. There's not going to be any legs for that. I actually think now that the second round of funding has been approved and more people are getting more funds, you know, I think this particular issue will sink back into the background a little bit. But the thing that you initialed and agreed to when you submitted the loan says current economic uncertainty makes this loan necessary to support the ongoing operation of the applicant. That is an extremely vague question. And my recommendation to all of you is write a memo today to your loan application file, date it today's date, and document everything that you think makes, you know, sort of reflects economic uncertainty that makes the loan necessary to ensure that you are able to continue operations. So everything from macroeconomic situations, you know, California went into lockdown basically the last 2 weeks of Q1, and we just had information released today that that Q1 contracted by 4.8%. 2 weeks of shutdown in a 12-week period. What do you think Q2 is going to look like when we get that data? You know, so I'd talk about macroeconomic situations. I would talk about regional economic situations. I would talk about your industry specifically in that situation. I would talk about your employees. I would talk about the risk of someone in your business contracting the coronavirus or testing positive for the coronavirus, and what that might look like for you to manage your process. I would make it a fairly comprehensive memo that documents exactly what things that you considered right now, you know, and really the day that you signed that application that made the loan necessary for you. I sort of going back to the good faith discussion that we had. This is another good faith thing, right? I think you need to be documenting what's going on. The SBA specifically eliminated a provision that required you to search for funding elsewhere before getting this loan, or Congress rather eliminated that provision. And I personally don't think that there's going to be great appetite for coming back after companies and saying, no, you didn't need this. But what I would not want as a recipient to the loan is for the SBA to come in and audit me 6 months after the fact and try to say, oh, well, your business is doing fine. You didn't really need the loan. Well, at the time that I applied for the loan, I certainly thought I did. And here's my documentation of what my thought process was and why I signed that certification. You know, contemporaneous information that is prepared today is a whole lot more powerful than a memo that you write 6 months from now when you're under audit by the SBA. I'm going to ask Riley, will you jump ahead 2 slides? Because I think seeing where this money went is important, right? We're hearing this news that, oh, all these big companies are getting loans and mom and pop shops are getting shut out. There have been almost 1.7 million loans. Almost 1.5 million of those loans were for under $350,000. So the loans are going where Congress intended them to go. They're going to small businesses. Another important thing to look at is those top 2 lines. You know, loans over 2 million only represent 25,000 of the $1.7 million or 1.7 million loans that went out. Secretary Munchin yesterday said that if you got a loan for over $2 million, you will be subject to basically a full audit before loan forgiveness is granted. And given the numbers that you see there on that slide, I think that's a very reasonable expectation. Even if you drop that threshold down to $1 million, you know, you increase the sample size from 25,000 to 65,000. That's not a huge population, so the larger loans could very well be audited, which sort of goes back to the question of documentation. It's all about your documentation.
Yeah, I agree with Ben's statement. And another thing to add from the lender perspective, through the course of this process, because banks were originally required to take on a very large workload in terms of underwriting and reviewing applications for PPP loans, the SBA essentially came out and streamlined the process for lenders and reduced the potential liability for lenders who could then rely on what the applicant said on applications and submit that directly to the SBA. And so as a result, banks have less responsibility for vetting a lot of this information. And a lot of that responsibility is going to be falling on the applicants. So to echo Ben's sentiment, basically in the Wall Street Journal yesterday, Stephen Mnuchin said, if you took a PPP loan of $2 million or more, you can probably expect to be audited. And so although the SBA staff is very small, I think it's only a few thousand people, and granted they will be increasing it due to the scale of this program, they have enough resources to follow up on some of these, but certainly not all of them, right? And so for larger ones, there's probably going to be a more detailed audit. For smaller ones, it could be audited. They'll probably be spot checking. So it's hard to say as an applicant what you can expect in terms of your loan being reviewed or your documentation being scrutinized after the fact. But I would say everyone should be prepared and have comprehensive documentation. And if you have a larger size PPP loan, it's definitely more important that you focus more heavily on the documentation. And so from that, we'll jump into some of the things you should consider with respect to the documentation.
Yeah, kind of going through this, right? What are the key facts that are going to be built into this? One is what we spent the money on. And 2 is what is our ratio of full-time equivalents in the base period compared to the forgiveness period. That's what this whole thing, the whole forgiveness calculation hinges on those 2 things. So, you know, I'm an auditor. I love to come see documents and prove that, yep, what you're telling me is true. And I love beautiful files and spreadsheets. It all just makes me super happy. But so what I'm recommending to clients is, okay, I think you should be docking and tracking on a payroll by payroll basis, employee by employee, what did I pay them? So what I would suggest you do on the pure payroll perspective is I'd put together a spreadsheet, and every pay period I would track what was the pay period, for, what were the dates of the pay period, what was the employee's name, and what was their pay. And I'd have that spreadsheet for each of the pay periods during that forgiveness period. You're going to then total that across each employee and sort of check to make sure that none of your employees in that 8-week period exceeded the $15,385,000 cap, or $15,385 cap that has been set on that. And then the total of that would be your eligible payroll cost. Now I'm going to jump back because I've seen a number of questions in the Q&A about what exactly is payroll. So the federal taxes that you withhold from your employee do count as payroll. FICA and Medicare do not count. I think withholdings, we don't have clear guidance on this, but I think anything that you withhold from the employee's gross pay is includable. Because you are paying the employee the gross amount, but then you're withholding specific amounts to pay that employee's taxes or their medical benefits or whatever else. But it's based on the gross pay, but it excludes FICA and Medicare. So you're going to have that documentation that says, here's what I paid in my wages. And your supporting documentation behind that is going to be your payroll reports, whether that's from ADP or, if you do an internal payroll, you're going to have payroll reports that support it. You're going to have your 941s, your payroll tax filings that you're going to support all of that. And you'll have a nice clean package that you can say, here's all the payroll dollars that I spent. Here's the supporting documentation for it. The second sort of set of payments you're going to make kind of falls into two buckets. One is going to be benefits and the other is going to be the rent, utilities, and interest. Again, I love spreadsheets. And so what I would do is every time I do a check run, I would prepare a spreadsheet and document every check that I cut that falls into a qualified category. And I would track the check number, the check date, the vendor name, the invoice number, the amount, and a very brief description of what it is that clearly identifies it as qualifying under one of the qualifying categories. And then, so that'll be the summary that you provide to the bank or the SBA or whoever is reviewing your forgiveness application. And you will have supporting documentation behind that schedule that supports it as well. So you'll have copies of invoices and canceled checks that document, yep, this is what I spent on Kaiser Health, during the 2-month period. And here's what I spent on my Visions program. And here's the different things that I spent the money on. And then, like I said, I'll tell you, as an auditor, when I walk into a client to do an audit where they have all their documentation lined up and supporting schedules and everything is clean, it is a whole lot easier to audit. And I have many fewer questions and concerns than the shoebox audit where the client just says, well, here's the information, it's in there somewhere, figure it out. So if you do get audited, I think you want to be able to lead your auditor through all of the information so that they don't have any questions. When we ask questions, they tend to lead to additional questions. So preempt it. Make sure that they don't have anything to ask questions about. Here's what I claim, here's the support, and away we go.
Yeah, I completely agree with everything Ben said there. And to touch on the bank's perspective here, when we were going through the application process, we're literally taking in hundreds of applications in an extremely short amount of time that all need to be reviewed and processed. And so when you're submitting your application to the bank, please realize that banks are obligated to check the numbers that you include, to review your supporting documentation, to make sure everything's there. And so the more clear and comprehensive your documentation is, the easier and faster it will be for your bank to get through this and to submit that to the SBA and actually obtain loan forgiveness. I'd say from personal experience with a lot of these applications we reviewed, there's oftentimes one or more things missing, whether it's from the calculation or from the documentation set. We had a lot of times you might have a payroll report that's relatively easy, but the healthcare costs are all in individual invoices on a monthly basis. And maybe those are a little bit more difficult to access. Sometimes the retirement benefits is the same thing. And so when you go through this, I think one other thing to consider is when the bank originally took your application, the first set of PPP funds were funded directly by the bank. This money hasn't yet come from the SBA. This is from your bank's balance sheet or other lenders' pool of funds that they have to lend out into this program. When we go through for the forgiveness component, the bank will actually be requesting forgiveness and a subsequent payment of funds from the SBA. So you have a whole nother level of potential review and additional pieces to the process that is outside of your bank's control here. So as the bank is reviewing and submitting these applications, the more thorough and clear your documentation is, the higher likelihood that you will have your loan forgiven and done so faster. So help your bank. I would imagine also that just as the PPP application process was completely overwhelming to banks across America as all these companies scrambled to get access to the program, once we get into the forgiveness application stage 8 weeks down the road, it will likely be a very similar process. And so we've still yet to get full clarification on when and how this stuff should be submitted for forgiveness. But again, this is something that you should be prepared with as soon as that deadline arrives, and you should be ready to submit to your bank. So Ben, we had a few slides where we wrote down some key questions. I think we should jump back into those and see if we can finish up the Q&A at the end.
Yep. So the biggest question that is on everybody's mind, and it drives me nuts that some people are coming up on 3 weeks into their 8-week period and the question's not been answered, is what do costs incurred and payments made mean? That is the explicit language right out of the bill, and no one has bothered to clarify what that means. Now, I'm an accountant, and when I hear cost incurred, I think accrual basis. When I hear payments made, I think cash basis. So what the heck did Congress mean when they said costs incurred and payments made? It doesn't mean anything, which is one of the reasons where everyone is kind of scrambling and trying to figure this out. Again, I go back to what do I think the intent of this bill is, and it is for Congress to pay 8 weeks worth of costs, or for the federal government to pay 8 weeks worth of costs. I think that when we get clarification, and again, Ben Brown's somewhat informed and somewhat educated opinion is that we are going to be told that it's essentially cash basis with some caveats that you're not going to get away with prepaying 6 months worth of rent. That's just not the spirit of the program, and that's not what Congress intended. I think it's going to be pretty much a cash basis, but a cash basis with a watch out, don't go screwing around with this. That's my personal interpretation. I think it's pretty reasonable. Obviously, it wouldn't be my opinion if I didn't think it was reasonable, but others may disagree with me, but I think that's probably where we're going to end up. Again, just sort of looking at the intent and the spirit of this program, it's just to, it's for the government to give you a grant to cover 8 weeks of payroll, rent, and utilities and whatnot. Any other thoughts on that, Riley?
Yeah, and I'd also say that from my perspective, a cash basis or the payments made approach would be the more conservative of the two. And I know from conversations with a lot of businesses, this poses a potential challenge for how they handle payroll and the offset between pay periods and when these funds are actually paid. And so I think, the first thing would be keep paying your people in the spirit of the program, keep your employees, keep their salary levels, and make sure you have full documentation either way from the start. And if this comes out and it ends up being a cash basis, then you can adjust accordingly and figure this out towards the end of the period. But if it is, ultimately a cost incurred or an accrual basis, and you have adequate documentation of that, that may also be easier towards the end of the program. So I would say, while it would be prudent to prepare for the conservative approach, I also think that documentation and making sure you have all the information is going to be key either way. And Ben and I talked about this yesterday. Even if certain components end up being excluded or not done a certain way, it's going to be a lot easier if you have full documentation starting up front, right? So document ahead of time, document more than you need to, so that when it comes down to the end, you have all the information and you're not scrambling and searching right at the last minute. Absolutely agree. Yeah, cast a very wide net. Include everything. We went through the list of acceptable expenses early. Include everything that you think is potentially includable, because it's easy to knock them out of the spreadsheet
If we get additional guidance that says, yeah, that doesn't count, okay, I just remove that check from my listing and I've got a new total. Rather than having to try to go back through 8 weeks worth of check runs and everything else that you've done to try to find things that potentially get added back in later. Sort of related to this, a couple of questions that are, well, I guess actually we'll talk more about them on the next slide, so I'll not jump into them here. Documentation of approved use of funds. So this is something, so remember that we've got two different things going on here. One, we took a loan from the SBA that said that we would only spend the money on payroll, rent, utilities, interest, right? The approved things that we agreed that we were going to spend that money on. We also have an 8-week forgiveness period that we are going to calculate how much of the loan will be forgiven. I personally believe that you need to make sure you document 100% of your use of those loan funds, even if it extends beyond the 8-week period. You have agreed that you will not spend the money on anything but approved items. And so I personally would make sure that even if I got $1 million loan and I only was able to spend $800,000 on payroll and rent and utilities during that 8-week period, I would make sure that in weeks 9, 10, 11, I documented the spend of the remaining $200,000.
Yeah. And remember that you're certifying that you will only use these funds for approved uses.
Yep. Which, yeah, from a documentation standpoint, I just make sure that I've got that in my back pocket too. Again, it's all about good faith and being able to demonstrate that you did what you thought was appropriate and consistent with the program based on everything we knew at the time.
Yeah, I think we've gone over most of the key questions. So a few other items that frequently came up in our Q&A leading into this webinar.
Yeah, let me just stop real quick. And so this was originally scheduled for an hour and 45 minutes, or I'm sorry, for 45 minutes. We're at 45 minutes. If you've got to drop off, feel free. We are recording the event and we'll try to keep it available. But we're going to try to answer the common questions that came through the registration that weren't already covered elsewhere. And then I see 69 questions in the Q&A, and I'm willing to stick around as long as is needed to try to answer as many of those as we can. If you got to go, you got to go. But
yeah, exactly. We really appreciate everyone attending today. Feel free to drop off anytime, but Ben and I will try to continue to answer questions. I think there's a lot of uncertainty, and the more information we can provide, the better.
Yeah. So from just sort of getting into at least these first questions that were very frequent in the registration questions, workers' comp insurance, I think we've already talked about that. We just don't have an answer. I can personally see really good arguments both for and against that is an employee benefit or that is essentially, corporate insurance. I could make both arguments probably with equal vigor, but I think that is definitely something we'll get guidance from the SBA on. Definition of an FTE, again, we're waiting on guidance. We already kind of talked about that. Here's one that is a real head scratcher to me. 401k plan contributions. Let's say you make annual matching contributions for your employees. What happens if I make that matching contribution during my 8-week forgiveness period? And let's take it to the extreme, and it's a matching contribution for 2019 contributions by my employees. I make that contribution in 2019, or in my forgiveness period of 2020. If it's cash basis, I would in theory get 100% of that as a qualified retirement contribution, which is allowed under the rules of the program. I could certainly see the SBA saying, we're going to make you prorate that, just like we did with the payroll. You can only get 8 weeks worth of salary for $100,000, so that's the $15,385. You get 8 50-seconds of that contribution during the period. That would essentially be an accrual basis calculation. We don't know that answer. I expect that we'll get more on that as well. Union retirement contributions. I've actually heard that there are some banks out there that are saying this is not part of payroll costs. boy, I have a hard time finding that particular viewpoint. We're clearly allowed retirement costs, and if I have a union employee, I'm required to make monthly payments into that pension fund. That is a retirement payment. I don't see how that wouldn't be considered an allowable cost. Mortgage interest rate swaps. Riley and I had a really interesting discussion about this, and kind of split the room on this yesterday when we were talking about it. Riley, you want to kind of share what your thoughts on the mortgage rate swap were?
Yeah, I think this one's interesting because there's two components to it. There's the interest on your mortgage, and then there's a swap contract that's linked to that. And so with respect to the interest, that would of course qualify based on the definition of program. But with respect to the difference that will be paid in the swap proceeds to effectively fix your interest rate in the amount of the swap contract, I'm not 100% sure that would definitionally count as an interest payment in the event that you did have to pay extra. I could certainly see there's an argument that the point of the swap contract is to fix an interest rate. And there's a logical reasoning for why that could be theoretically treated as interest. But from a definitional standpoint, I think it would probably require some more investigation to come to a firm conclusion on that.
Yeah.
And Ben, I know, also has a perspective on that as well.
Yeah. And, Riley and I disagreed a little bit on this, but I think he's right. If you interpret it from a purely technical interpretation, it's not eligible because it's not a mortgage instrument. It's not mortgage-backed debt. It's just a contract. However, yeah, I look at it and say, my purpose was really to enter into a fixed rate loan. The bank wouldn't let me do it, so they entered me into a variable rate loan and, attached a swap to it. That feels like mortgage interest to me. I don't know that we're going to get guidance from the SBA on this one. I think it's a infrequent enough issue that you may just have to make a judgment call on what you believe and submit it to your bank and submit it to the SBA and see what happens. Like I said, I certainly can see an argument, a good faith argument, not again trying to reach and overreach the intent of this program, but hey, I just wanted a fixed rate mortgage, and this is how I achieved that.
Yeah, and I think the good faith component of this is important when you approach everything. I know one thing that Ben and I discussed yesterday was there may be cases where you think, could I include this? And maybe you should also think, should I include this? When you consider whether or not you add something that may be debatable based on the language of the program. If you think in good faith that this represents the spirit of the program in the approved uses of funds, and you think there's a strong argument for doing so, even if there may be some debatable components, I think there's a case for including it. But if you think that it's a stretch to make the argument that you may be making to include something that might not match up with your normal 8 weeks of payroll that you would otherwise have, it's probably a good idea to carefully consider why you would or would not include that.
Yep, agreed. Should we jump into the Q&A that have been submitted?
Yeah.
All right. Just kind of running down through the Q&A.
Fellas, before we move forward, I just wanted to just put a little plug in before we lose everybody at the end of the program. That sure. Next week on Wednesday, the May the 6th, that we're going to be having another webinar with Weintraub Tobin. Kay Brooks and her colleague Allison Pedrazzi is going to be talking about estate planning. And so I just want to make sure that we have a plug for next week's program. And also if we have non-members on the line that are thinking about wanting more information about Family Business Center and considering joining, then just please check us out on the website. And if you have any questions about membership or future programs, to please contact me directly. My name is Stella Primo, and my number here at the office is 916-771-3220. And just to let you know that I've extended the time of the webinar another 30 minutes and can extend it a little longer if we have more need for time. Also, I will be sending out your PowerPoint presentation after this program ends, and we will have the recording available on the website within the next day or two. And that's my commercial onto the regularly scheduled program.
Great. Thanks a lot, Stella. And thank you to the Capital Region Family Business Center for hosting this event. I know this type of information has been desperately needed by the business community. We've gotten questions about it every single day, and I'm glad that we have the opportunity and the ability to have someone like Ben on here to share so much insight into how other people and how accountants and how banks are approaching this program. So thanks a lot for putting this on for everyone.
Yeah, thank you both.
Thank you very much.
Let's keep going.
All right. I mean, I'm happy to just sort of run through these questions in the Q&A.
I think that's a good idea, Ben. Maybe we could just go rapid fire. I'm showing that there's 83 open questions.
Let's hit them. Does the 8 weeks start when the payroll is earned or when I cut the check to my employees? We don't know yet. Working, like I said, I believe it will likely be when the check is cut, but we just don't know.
Yeah. So the period of the PPP program that you need to pay attention to starts when the PPP funds hit your account. But in terms of the payroll and when you focus on that period, that's still to be determined.
Yep. Child support and debt liens are imposed on employers by government agencies. So this goes back to the question of gross pay, right? So I would consider child support and debt lien withholdings out of gross pay to be part of gross pay.
Yeah, agreed.
I'm just going to click these things off as dismissed as we go. So forgiveness period, if your 8 weeks ends at the end of May, do you still have until June 30th to bring back employees? Yes. So if you get into that calculation of FTEs and restoring everybody's headcount and wages by June 30th, that is correct. Remember though that headcount reduction had to occur between February 15th and April 26th. And then you've got to get back up to where you were before June 30th.
Yeah, and that one's sort of a caveat to the other forgiveness calculation methodologies. So if you're planning to use that reasoning to get the full forgiveness amount, make sure you pay close attention to how you calculate it and that you're complying with all relevant SBA guidance when it comes out.
Okay, jumping to the next one, we've got, if the loan is forgiven, it will lower payroll expense, then raise the profit for the year? Technically, no. So as an accountant, the way I am advising everyone to handle this is loan forgiveness is going to be an other income item. So you're going to maintain your payroll expense, but you are generating income for the year. You're absolutely right. That's not going to happen until the loan forgiveness is granted. It doesn't happen when you submit the application. It doesn't happen when the bank submits it to the SBA. It's when the SBA approves and ultimately forgives the loan. That's when you recognize the income. Couple of important things, and I see we still have most of our audience here. I forgot to bring these points out earlier. So for federal income tax purposes, this loan forgiveness is tax-free, so you don't have to pay taxes on it. California has already told us that they will not comply. So it will not be taxable. The loan forgiveness will not be taxable for federal purposes, but the state of California will tax you on that loan forgiveness. So just as you're looking at tax planning coming into year end, have that on your radar screen. Another caution, and this has not been defined yet, but there is the potential risk that the feds could come in, the IRS may come in and say, so typically when we have loan forgiveness, there's attribution reduction. And the IRS could come in and say, well, you paid these rent and payroll expenses with these forgiven tax dollars, so you don't get to deduct them from your tax return. I personally don't think that that's likely to happen, but it's actually an active discussion here in our office, and some of my partners would disagree with me on that. So I'm just raising it so that you have that on your radar screen as well.
Accountants are going to have a very busy year this year, Ben.
Oh yeah. That is a true statement. I think we addressed this next question about if you're a union employer. I believe that the health and welfare and pension payments are part of the forgiveness calculation. Can interest on car loans or other payments be used? I believe so, as long as it is secured by the vehicle, right? So a mortgage is definitionally a loan that is secured by an asset. And so I think real estate loans that are secured by the building and property, and I think vehicle and equipment loans that are secured by the specific vehicle or piece of equipment, the interest on those loans is in fact deductible. Does interest include business loans? No, it does not. General obligation loans, that interest is not deductible. I think we already talked about workers' comp. We just don't know. Are cell phones considered a utility like a landline? I believe so. It says that telephone bills are a utility, and a cell phone is a telephone. So I believe that that is certainly allowable.
Agreed.
Would rent between related entities qualify? Yes, with a giant caveat that you should not play games with this. So if you've got a history of paying $5,000 a month to a related entity, and you suddenly decide that rent is $15,000, you are, in my opinion, trying to defraud the government. I would make sure that my rent expense does not change during the forgiveness period at all. That's my personal opinion. I don't know. Riley, thoughts?
Yeah, agreed. And the definition is for a lease agreement in force before February 15th, 2020.
Agreed.
I don't think prepaying rent into the future is in the spirit of this program, and I'd be careful if you intend to do that.
I also agree with that. Yeah, I would not try to get out there and play games like that.
Yeah.
We talked about workers' comp. Yes.
This is a good question.
This is a great question. So for small businesses that are not considered essential and currently remain closed, it will be virtually impossible to get the 75% number in 8 weeks unless we rehire people to sit on their hands. Any insight on whether you think they will extend the start of the 8-week period to when businesses are allowed to open as opposed to when they receive funds? I have not seen any substantial movement that makes me think that that 8-week period is going to change. Have you, Riley?
No, I haven't. And it's impossible to say that it wouldn't, especially for things like restaurants. But I think betting on that at this point puts you at a big risk for being able to achieve full loan forgiveness.
Agreed. I will also tell you, you should do the math. I've seen situations where it is a better investment to hire a minimum wage person to sit on their hands than it is to have the incremental reduction in your forgiveness. I'm aware of at least one analysis where the cost of the employee was going to be about $6,000 for the 8-week period, and not having that employee was going to cost about $18,000 worth of forgiveness. So paying someone to sit on their hands for 8 weeks would essentially profit that business, but to the tune of $12,000.
Yeah, exactly. I'd echo Ben's statement to do the math. There's other tax benefits that you can have if you don't take the PPP funds. And so it should be a calculation for each business, weighing both of these out to see, would you be better served by taking the tax benefits and not reopening, or taking the PPP funds, paying your people, and potentially not having them working for you? It's difficult to broadly say which is best. It's really a business by business decision.
Can you submit rent payments if you own your business building through another entity if the loan is an SBA 7A that has been deferred? I'm not aware of anything that says that you can't. We already kind of addressed the related party rents and my thoughts on that. You have anything to add there, Riley?
No, that's a tricky question. I'm really not sure.
Yeah, I'm afraid to answer that one.
Likewise.
Yeah. All right. So we're just going to dismiss it. Can you clarify which employers' state and local payroll taxes are eligible? So we know by Q&A that the SBA has said state disability insurance is included as a state and local payroll tax. I think state unemployment tax is also includable. Here in California, that's about all I can think of that qualifies. I know in Nevada they have some additional state and local payroll taxes that would also qualify, but that's what I can think of in California. And of course, your federal and state withholdings that are withheld from the employees are already included in gross wages, so that's picked up. What we do know is that FICA and Medicare taxes are clearly excluded and have been specifically addressed.
Yeah.
Does rented, I'm sorry, Riley, go ahead.
Yeah, I agree. Go ahead, Ben.
Yeah. Does rented or leased construction equipment qualify? Was it under a lease agreement as of February 15th, 2020? That is your question. If it is a rent under a rental or a leasing agreement as of February 15th, 2020, I believe it does. Would mileage we pay installers for travel be considered payroll and per diem? That's a tough one, and I don't know the answer. I personally think it's a stretch to include mileage reimbursements as either payroll or per diem. I think it's a reimbursement of travel expenses, and I don't think it qualifies personally.
Yeah, that's a tough one.
You want to do some reading, Riley?
Is triple net considered utilities or rent? That is a good question. Ben, what are your thoughts?
I'd count it all as rent personally. The full payment that goes to the landlord, I would count as rent. I've had the question from others about, well, what about all the upkeep and property taxes that I pay under a triple net lease? I think if it meets the definition of rent, it's included, but I don't think maintenance around the property or anything else that you're required to do under a triple net would be included.
Okay. Regarding loan necessity certification, who will define necessity and how will this be defined? That is an excellent question.
If you have that answer, I would love to hear it.
We don't know either. It's very vague, but like Ben went through earlier in some detail, do what you can to have a documentation approach ready. And if you can, start that now. Write something out, show why the economic uncertainty required you to access the program.
Yep, I absolutely agree. I think, again, looking at the spirit of the program and candidly looking at that table that we presented, I don't think there's been a lot of abuse. It's not a bunch of big companies getting giant loans and mom and pops getting left out in the cold. The loans are going to small businesses. I don't really think that the federal government is going to go in and try to claw back this money. I think you should be—
For most people.
Yeah, for most people, absolutely. I think bad faith actors will find themselves in trouble. And I think those who acted in good faith and, did their best to document and demonstrate their necessity, I think should be okay. That's what we know. Unfortunately, we don't have anything better than that.
Yeah, agreed. Are vehicle fuel costs included in transportation? I would say the answer to this, based on the actual language of the legislation, is we don't know. I think from an accounting perspective, what do you think, Ben?
I don't think so. I agree with your assessment. We don't know. Again, I interpret transportation to be more along the lines of like using public transportation, and that would largely be, providing employees with commuting. I'll be honest, I scratched my head when I saw transportation in the bill as a utility in the first place. I just didn't see how that fit with everything else.
And it wasn't well defined.
Yeah. All right. On rent, must we have a written lease? How about monthly billings from the landlord? So the lease needs to be in effect. So the language of the bill says under a lease agreement in effect before February 15th, 2020. I would hope that you have some sort of leasing agreement, even if it's 20 years old and you've just kind of continued on a month-to-month basis. I think if, there's almost an implied lease agreement there if I've been there 20 years and I can't find the original lease, but, I've continued to pay rent every month and the landlord's accepted it and everything else. But I'd sure do my best to find the documentation.
Yeah, I'd say from a bank perspective, the legislation's clear. You need to have a lease in effect, and we need to have documentation of it. So there needs to be something showing your lease and the amount that you're paying under it. Next question. Where can one access the most credible current information regarding future developments related to loan forgiveness? That is an excellent question. I'd say there's a couple sources here. Number one is the SBA website itself. The SBA has been providing updated guidance on a somewhat regular basis. We've probably gotten 10 to 12 different updates
Yep.
over the past month or so. I would also say the Treasury puts out certain things on their websites on occasion. They had a borrower information sheet. And then generally just keep your ears open, because this stuff's changing on a daily basis, and there's not necessarily an announcement that new information comes out. It sort of trickles out slowly, and then people start finding where it came from and reviewing the documents.
Got it. And I agree. I check the SBA website every day.
That's number one.
Yeah.
And they have updated FAQs and interim final guidance, and those seem to come out pretty regularly.
Yep. Do you have to prorate expenses for 8 weeks? Well, that's a good question, and it sort of goes back to expenses incurred and payments made.
Yeah.
We don't know what that definition is. I just can't imagine, 2 months worth of rent is essentially 9 weeks. I can't imagine that they're going to make people prorate rent, and take 8/9 of it as part of the calculation, but we don't know yet.
Yeah. I think this is an item that needs more guidance from the SBA, and that's what we've been waiting for. That's what we're looking for. I expect it to be clarified. We just don't have that information yet.
Yep. Medical and retirement contributions that are employer paid, part of the payroll or outside of payroll. So what I can tell you is, in the loan application process, the payroll specifically said cash payroll is capped. Oh, I'm sorry. Oh, that's interesting. I'm not sure I'm interpreting this correctly. So I think now, as I reread it, the question is asking medical and retirement, is that part of the 75% as opposed to the 25%? And if that is the question, then yes, the medical and benefits are all part of the 75% payroll cost. The 25% limit is to rent, interest, utilities.
Agreed.
If I have a $100,000 loan and 75 is payroll and 25 for other expenses, what happens when I do not incur the full amount of the expenses for payroll? So you will, going back to the calculation, let's say you only spend $80,000 on payroll, or payroll and rent or whatever it is, and you had a $100,000 loan. You would, in theory, receive forgiveness of $80,000, and you would then be obligated to repay the remaining $20,000 over the 2-year life of the loan. Now there's a 6-month deferral period, and then you would pay, basically 1/18 of the principal and related interest every month for the next 18 months at 1% interest.
Yeah, and I would add to this one more component. If you have greater than 25% of the approved uses of funds in other categories that aren't payroll, this would just reduce your forgivable loan amount until you met the 75% requirement.
Agreed.
And
that's a really
I
good
believe
point.
that was clarified explicitly this morning.
Yeah, that's a good point. We typically give yearly bonuses in October. Are considering early bonuses with similar amounts to typical. Should we wait because bonus isn't clear? I wouldn't be paying bonuses until the very end of the period to see where we're at and see what the SBA says about it. Again, I'll also just warn you that, remember, you're capped at the $15,385. So if you've got somebody who makes, $90,000 a year or more than $100,000 a year, you're not going to get much bang for that bonus because of the proration, and the 8-week period cap. But yeah, I would certainly not make any decisions about bonuses or changing, doing a special payroll to capture it at the end of the period until we get additional guidance on how they're going to handle that.
Yeah, agreed. This is something you could theoretically do for employees making less than $100,000 a year. But at the same time, I would make sure it's reasonable and probably wait towards the end of the 8-week period before you make a decision. And also apply the logic of, should you do it? Make sure it's a reasonable decision.
Yep. In regards to the $15,385 cap on employee compensation, we can include all compensation up to that amount for the employee, correct? Yes. If someone makes over that amount, it doesn't eliminate their compensation as a recordable expense. It's just a cap. Yes, I agree with that.
Yeah, agreed.
Oh, Jan, you're killing me. Employee status under federal law or California law? Oh boy.
Ooh, that's a good one.
Yeah. So what we do know is independent contractors are not eligible for including them as payroll costs. So uh, if California considers them an employee, I would probably use that definition. But that's just my instinct. I don't know the answer to that. And I don't think we have any guidance on it.
Yeah, I don't think we do either. And this might be clarified. The other thing to consider is this is a federal program. So there could be an argument for using federal law, but we'll see.
Yeah. Employer portion of premiums, correct? Yeah, because the employee portion would have already been captured in the gross wage portion piece, and it would not be correct to double count that. So think about that actually when you're capturing invoices for like your medical premiums. You should reduce that. So maybe I paid $50,000 to Kaiser, but I also collected from my employees and counted as part of gross wages, you know, $10,000 for the month. The net amount that you should claim is really only the $40,000. That's a good point.
Yeah, and from the bank perspective, we've seen this a handful of times where people did their application incorrectly because of that. So that's something to pay attention to.
Ooh, software subscription. That's a good question. Are software subscriptions reimbursable, i.e. business enterprise software that's paid for in periodic installments? Hey, is that rent? Is that a lease agreement? I think,
yeah, it's hard to say.
I think it would depend on the specific agreement. If it's a financing arrangement, no. I purchased the software, I'm paying. If it's software as a service, I don't think so. I don't know, my gut says no. I haven't seen a specific answer on this, but as I sort of noodle through it as we're sitting here, I think probably not.
I don't think there's anything explicit that would be able to say that it is.
Yeah, agreed. Owner wages forgiven up to 100K or up to the 15,385. The latter. It's the 15,385. It's all capped by the period. And remember that math, the 15,385 is simply $100,000 divided by 52 weeks times the 8-week forgiveness period.
Yeah.
Yep, it's just salary. So does the 15,385 employee include their healthcare premiums or retirement or just salary? That is the cash compensation. The insurance premiums and everything else are on top of the 15,385.
Yeah. And there may be some confusion about this because originally there was definitely not a clear approach to how banks were handling that. And the guidance of the legislation and the SBA differed. So now it's been clarified that that does just apply to salary. Yep.
Any guidance on employee count? If an employee gets laid off or quits, can you replace with a new employee and maintain your employee count? I believe so, absolutely. It is not about a specific employee. It's really more about the job. So if I can, honestly, with the current unemployment payment situation, you may have a hard time finding somebody to fill that role. But yes, it's not, I don't have to keep Bob Jones for the entire forgiveness period.
Yeah, exactly. And take a look at the calculations for full-time employees. It's pretty limited in terms of caveats with who you can count.
I think this is sort of a repeat. We've kind of talked. I personally think that union trust fund benefits are separate from the base rate. I think we will see additional information on this because I have heard of banks specifically kicking these out. None of the banks on the current call, of course, but but yeah, that's an interesting issue.
Yeah, I don't think we've encountered those at our bank.
Yep. Can you define how to calculate the average number of FTE? So in both the base period and the forgiveness period, the guidance is to use, it's an average of FTEs per payroll. So in theory, if you pay weekly, you're going to have 8 payroll runs during the forgiveness period. And you would calculate, on this payroll, I had 62 employees. On that payroll, I had 63. On this payroll, I had 61. My average would be the sum of those divided by the number. And you do the same thing for both the base and the forgiveness period.
Yeah.
What if you add employees? So it's not going to penalize you, but obviously your ratio cannot go above a 1-to-1. So if your base period employee headcount was 100 employees and now you have 110, you don't get 110% of your loan forgiveness. You can only get up to 100.
Yeah, correct.
Is 2019 the correct year when calculating the FTEs? FTEs are not, it's not actually for the year. They give us 2 periods, and that's in the materials. You can go back and look at those specific dates, but it's an 8-week period ended February 29th, 2020, or it's like a 12-week period from February 15th, 2019 to June 30th, 2019. So it's either one of those 2 periods. And then your forgiveness period is 8 weeks from the date that you receive funding.
Correct.
You want to go for a bit?
You're doing so good, Ben.
Yeah.
For the full-time employees calculation, is it full-time equivalents or only for our full-time employees? I believe it's full-time equivalents.
It is. Yeah, that's been clearly addressed in the Q&As. You've got, for part-time employees, you have to convert to an FTE, a full-time equivalent.
Does the $100,000 cap apply only to gross wages or total payroll costs, insurance, taxes, etc.? This is one that we talked about. In our understanding, it only applies to salary.
Correct.
For loan forgiveness calculation, is it beneficial to rehire part-time employees to increase average FTEs for the 8-week period? For example, would 2 20-hour per week part-time employees result in at least 1 additional average FTE? Ben, thoughts?
Yes. Yeah, I think that's exactly right. That was sort of the example that we were using.
Yeah.
You know, it may be better for you to hire somebody to sit on their hands just to get the additional forgiveness, to get 100% forgiveness, if you will. And yep, based on the math, those 2 would equate to at least 1 FTE. If it's a 30-hour period, it may be that equates to 1 1/3 FTEs.
Yeah, and this is high efficiency accounting advice.
Yeah.
Is the FICA and Medicare that is excluded the employee portion, the employer match, or both?
The employer match. So the employee portion is simply withheld, so it's already captured in gross wages. So we're just talking about the employer match is not included as part of payroll.
Do you think it is prudent to bifurcate the last payroll during the 8-week period and pay a portion through the last day of the 8-week period within the 8-week period to cover yourself if we get an unfavorable ruling on the timing of covered payroll costs?
Doug, you can't ask that question. This is one of my partners. He's not allowed to do this.
This is the question.
So yeah, the answer to this, no, I appreciate the prompt, Doug. Thank you. So the answer to this question is, I would not do anything until we get more guidance. That is certainly a possibility that you might want to consider, but my expectation is you're not going to need to. I think we're going to get guidance that really allows you to capture 8 weeks of payroll, regardless of how exactly it's paid. It's my gut.
Agreed. This is one of the key things that everyone needs guidance on, so we expect some to come.
Yep.
Larry Mitchell, if we did not include employees over 100,000 yearly salary for the PPP loan, can their 8-week salary be included in how we spent the PPP funds?
Yes. That's yeah, I believe so. Yeah, that's interesting because there's not been any instruction that limits, you know, the use of the PPP funds. It's simply the limits on how much you can apply for and how much applies for forgiveness. But at no point does it say in the payroll you are limited to the use of funds to $100,000 of salary.
Yeah, agreed. I don't understand the Fed tax as part of payroll costs. That is a deduction from the employee pay, really a cost to the employee, isn't it?
I'm not sure I understand the question, because yeah, the federal taxes withheld from the employee would be captured in gross wages, and we don't need to worry about that.
Yeah, exactly. Otherwise, you'd be double counting.
Yeah, we've just been trying to address specifically employer portion of FICA and Medicare, and that is not allowed. That is not included as part of payroll.
Yeah. If I have 2 employees that make over $100,000 per year, how do you recommend I pay them during the 8 weeks? Do I pay them only the $41.66 per pay period, or just pay them their normal pay with the understanding that amount will not be forgiven?
Yeah, to me, that it would be the latter. I would certainly not want to have a giant pay cut if I were the employee. So I would think that you would just understand that in that calculation, that's just part of the forgiveness calculation.
Yeah, and I would add to that, when you applied for this PPP loan, theoretically, those funds in excess of 100,000 would not have counted towards the loan amount anyway. So the loan amount is only going to be used to cover those expenses. It doesn't mean that you can't still pay your workers their normal salaries. It just means that when you compile your documentation of approved uses of funds, you need to consider that and split those out for the approved and separate uses of funds.
Yep.
We set the PPP funds into a separate checking account to easily track the expenditures. It has the ADP ACH payrolls withdrawals. Is that okay? I would say, one, yes, that's okay. And we see that a lot. And for some companies, that was what they were recommended to do by various advisors. I think one thing to consider here that's important is the federal withholding tax that's included in these payroll runs needs to be accounted for, because that is technically not included in the approved uses of funds. So I'd say, yes, this is okay, but make sure you have documentation to show what's approved and how you're accounting for the portions that aren't.
100% agree. I think it's correct advice.
I pay 3 separate unions for my employees. Does the entire payment qualify?
I expect that it will. Again, it's been interesting to me that the union thing has even come up as an issue, because I view it as retirement and medical benefits, and I would have thought it was a slam dunk that it qualifies, but clearly some people are disagreeing with that. So away we go. Yeah,
from the bank perspective, we haven't seen explicit guidance on that. So we've heard that some banks aren't counting that. We haven't encountered it, I don't believe, at our bank. Someone else may have. But yeah, it's hard to say for us.
Yep. What about fringe benefits for union employees that are typically due the next month? Can we prepay to keep in our 8-week period? This will be interesting. Again, this goes back to sort of what kind of guidance are we going to get on how is this going to be happening? Again, to me, the spirit is they're looking to cover 8 weeks worth of pay. So if I've got 2 months worth of union benefits already captured, prepaying to capture a 3rd month, I don't think is going to fly. But it might. It doesn't seem to be the intent of the law to me.
Yeah, I think that's one to be careful with.
Yep.
Next question. What if my payroll constitutes 85% of the total funds and rent utilities only 15%? Is it okay for forgiveness? Yes, it is.
Absolutely.
There's only a minimum with respect to the payroll requirement.
Yep. So can employee bonuses, such as retention or performance bonuses during the 8-week, be included within payroll costs? I have not seen any guidance on bonuses, but I believe it to be part of payroll. And as long as you don't exceed the 15,385, I expect that will be fine. Again, if I were contemplating bonuses out of cycle, if you will, I was going to accelerate bonuses, I would wait till the very end of my 8-week period to see if we don't get explicit guidance on bonuses.
Yeah, and generally be thoughtful and reasonable with how you approach bonuses under the program. Don't try to get too fancy with approved uses of funds.
Yep, agreed. And again, the one point on that is you're going to be capped at the $15,000 anyway, so you can't get too crazy.
Yeah. Next question. Letting employees cash out of PTO account. Ben?
That's actually an interesting question. So the bill specifically says vacation. Does cashing out PTO count as vacation pay? That's a good question. I don't know. I don't have an answer to that, but the explicit language in the law, at least I think there's a position to be taken there. That might be getting into a gray area, and I don't know whether or not we'll get any specific guidance on that. So you may want to take a look at the specific language in the law and make a decision.
Yeah, and if you do approach one of these, say, out of cycle or abnormal uses of employee benefits to count towards the approved use of PPP funds, just be thoughtful and reasonable and careful about how you do it.
Agreed.
When calculating FTEs, how is someone on straight commission viewed?
I don't know. That's an interesting one. I have not heard that question yet.
Yeah.
I would think if they're working full time for the company, they would be counted as an FTE. You're not tracking hours. They're getting a salary, but the expectation there's a full time employee. I think they'd probably be counted as an FTE.
Yeah, I would expect they'd be counted. But again, we may see more guidance on this.
Yep. The rent payments to a related party with the same ownership be excluded? I don't think so. I think we're, I think we kind of already addressed that one.
I received a PPP loan in excess of the $2 million that may exceed my payroll costs by about a third. Should I go back and reduce my original request before 5/7? That's a tough question. As a bank, we're somewhat limited in the formal advice we can give, but I would say this is something that you should be very careful about. My personal inclination would be to pay that money back in excess of what you think you should get, and probably provide some sort of documentation for why. That said, we don't have explicit guidance on that. The most I've seen is media pieces with quotes from Stephen Mnuchin on this, saying such as, these businesses should apologize. It's really tough to say. I heard the Lakers get money. It's not exactly clear what the approach is going to be from the SBA in these cases. I would say the main thing is expect that you'll need to pay the money back. Expect to document it and do it in good faith, and don't use it. I think if you only took more than you intended and did not rectify it, you'd probably have an issue. But if it was an honest mistake and you have full documentation and you go about handling it in a responsible way, then I would assume in the end, there will be a reasonable conclusion.
Yeah. So this is interesting because I'm not sure I understand the situation. But I received a PPP loan in excess of the $2 million that may exceed my payroll cost by about a third. Was the calculation still based on the appropriate 2.5x multiple of your average of the 12-week period? Because, right, so remember, we've got two separate things that are happening here. One, I have a loan, and my loan was based on my 12-month prior payroll divided by 12 times 2.5. That's how much I was eligible for in the loan. And then I have what my payroll is going to be during the forgiveness period. Those two things are different. And just because you're not going to be able to, for whatever reason, maybe it's headcount reduction or whatever else, just because you may not spend all of that money during the 8-week period and therefore not have it forgiven, doesn't mean that you've made an error in that loan. You just won't get 100% forgiveness and you will repay that loan over a period of time. Certainly, if there was an error in your calculation or you did something incorrect, I 100% agree. Correct that as quickly as you can. But I'm not sure I am interpreting the question correctly, but I think this is, just because my loan is bigger than what I'm going to be able to. I have a client that, for a variety of reasons, is not going to get anywhere near the 100% forgiveness. They may get 30 or 40% forgiveness on their loan. But that doesn't mean that the loan was bad in the first place. And it's a loan that can and will be repaid over the 2-year amortization period at 1% interest.
Yeah, I think in many cases, when we get questions like this, it's usually around something that was included in the payroll calculation in error, that somehow made it through the bank and through the SBA. And once this is realized, what do these companies do to rectify this? And again, it's tough to have a formal approach or advice because we don't have much from the SBA on this, but my personal opinion would be to rectify and document it as soon as possible.
Yeah, if there was an error, I absolutely agree. Good, the safe harbor match, the 401k. Yeah, we tried to sort of address this question, and we just don't have good information on whether an accrual made on a safe harbor match will or will not be included. And trying to make a mid-year payment into this, that seems risky to me because you're now doing things out of cycle and out of the norm. Yeah, I just don't know. This is one that I expect clarification on, and we can look to that hopefully for additional information.
Next question. Do you have to have the same number of employees when you received your money and when you're 8 weeks in, i.e., Do you have to keep the same people, or you'd have to replace anyone who leaves? My reason for asking is we let 2 people go because business is slow, but they weren't high producers anyway. So if we were to replace that position, it wouldn't be them. And I think we've touched on this a little bit already, but there's nothing explicit that requires you to hire the same people back. It's mainly just around the number of full-time employees and their salary levels that are relevant to the calculation for loan forgiveness.
Agreed. So this is a specific example of $1 million loan with 750 of payroll and 100,000 of other costs. Then I would have 850 of approved forgiveness. As long as your headcount stayed at a 1-to-1 ratio, that is accurate. And in that case, you would then have a $150,000 loan outstanding that would be repayable over the 24-month period with the first 6 months of payments deferred.
Yeah, agreed. If you're not using the full loan amount, it'll be repayable to the bank.
But again, I will point out, make sure you track 100% of the $1 million loan was spent on payroll, rent, and utilities, even if it's in weeks 9, 10, 11, 12, etc.
Yeah, and if you're not using those funds on approved uses, then don't use them. Just keep them in the bank.
Yep. Yeah, I think we've already, would mileage paid through the payroll process be considered transportation or payroll? I think we addressed that already.
Yeah, difficult.
If we do not use all of the funds received, we can give the remaining back free of interest. So you can repay it. There is no prepayment penalty. You can repay the loan at any time. It would not be free of interest. So the forgiveness will be, the forgiveness calculation will pay the forgiveness period plus interest up to the date of forgiveness. So you wouldn't have to pay any interest on everything that's forgiven either. But then, yeah, you would have any interest on unforgiven stuff you would owe at 1%.
Yeah, agreed.
Yes, health insurance premiums, health insurance premiums, we addressed this. It is something that health insurance premiums are allowed under the loan. Here's another specific example. If I had 850 of approved forgiveness, including 750 of payroll costs, and I had an FTE ratio of 90%. Oh, so yeah, it would be nice. Yeah. So in this example, we've got somebody asking, how does the FTE ratio apply? The FTE ratio applies to 100% of the loan, the forgivable loan expenses. So that's payroll, rent, utilities, the whole deal.
Yeah, so our understanding of that would be that that's correct.
For employees that are over 100,000, are salaries totally excluded? No, the salaries are simply capped at the $15,000 limit. This is a good question. I've heard that access to other funding would restrict the forgiveness or eligibility of a loan. What if the company has a loan or a line of credit available to them? So this goes back to economic uncertainty, and again, I would just very clearly document. Dean, you're not alone. There are lots of people out there that have a loan or line of credit available to them. But you know, again, sort of spirit of this thing, I don't think the federal government is going to be running around looking to get money back, but I would do a really good job of documenting all of the facts and circumstances that led to the economic uncertainty that that prompted the company to request the loan in the first place.
Yeah, agreed. And I think along with that, this is one of those topics that's subject to a lot of media attention and scrutiny. I don't think just because you have a loan or line of credit, that means that your business could be immune to the economic uncertainty and downturn that we're currently experiencing. I mean, take restaurants, for example. I think there's endless cases where a business may have access to financing, but they're still getting hammered by the COVID-19 stuff. So I don't think this is black or white. It's certainly not spelled out in SBA guidance or legislation, but it's something to keep an eye on, and make sure you also fully document what Ben was talking about, which is your necessity to access the program.
Yep. All right. Our bank is suggesting we open a separate account for these funds. Do you recommend this? Honestly, personally, I don't think it's necessary. I think it's all about documentation and just tracking every penny that you took in the loan and where you spent it. We actually, talking about the account and ACHing out of that account by ADP, well, it's coming out of that sacred account that you set aside, but ADP took some of that money to pay your FICA payment. You know, that's actually not an approved expense. So you're going to have, even if you have a separate account, you're going to have an accounting for that to rectify those employer portion of the payroll taxes that got taken out of it.
Yeah, and from the bank perspective on that, we see a large number of people doing this, but I don't think it's necessarily a requirement. For some businesses, they think it makes tracking easier. You know, if you're only accounting for the difference in your payroll runs, that might be easier than accounting for all of it. If you don't use all the funds, it's also probably easier to show that you have X amount remaining and they're in this account, as opposed to calculating that at the end and then separating those funds out. So, you know, there's arguments both ways for why you would or wouldn't do it. Again, I think the key is documentation, right? Whether or not you have a separate account, make sure you have full documentation from the very beginning.
Agreed. Yeah, I think this is very much in line with the question we just answered. If you have a line of credit with significant available borrowing, took a PPP loan, should you pay the loan back? Again, I think there are a lot of factors, and everyone needs to make this assessment for themselves. I just don't believe that is the spirit of this program. You know, yeah, I'm afraid to say too much more, but that's an assessment everybody needs to make. I personally think, again, from a good faith perspective, the uncertainty and everything else, if you can document it and demonstrate it, you know, I don't think having a line of credit with availability, or even candidly having a fairly significant cash balance, says that you aren't eligible for this. And don't forget, we sort of talked about where these loans went. Despite the media loves to make you know, much ado about the big stories, but look at where the money went. It went where it was supposed to go.
Yeah, agreed. And on that line, the whole intent of this program is to fund payroll costs for employees during this period of economic uncertainty, and to make sure that salaries for people making less than $100,000 a year aren't reduced too much. And so regardless of how the business is doing, you're definitely facing certain economic threats. I mean, it's rare that any business or industry would be totally immune to this. And even if you are doing well, the thought of potentially having an employee come down with COVID-19 and, for example, having to close your whole business or close your operations could be a material threat to your business. So I think there's a lot of uncertainty and a lot of vagueness over this certification that everyone's made to the SBA to access the program. The challenge is, how do we document that? Is it reasonable? Do you believe it? And this is something that everyone has to think through on a case-by-case basis for themselves. But I'd say there's, generally speaking, probably a case to be made either way for a lot of businesses.
Yep. Fuel costs for company-owned vehicles. That's a good question, Fred, and I don't know. This is one that, again, I sort of struggle with why transportation was included in utilities in the first place, and I don't know what Congress meant by this. I don't know whether or not we're going to get any more guidance on it, and yeah.
Yeah, it's very vague. The legislation just says transportation, so we really don't know what it means. Maybe it'll be clarified, maybe not. This is a wait and see type of item.
Yeah, and if it's not clarified, you know, I would just say that the people submitting the, you know, as individuals submitting the loan application, you need to think that through, and is this a good faith calculate? You know, is this a good faith inclusion, or am I getting too far outside the lines?
Yeah, and keep in mind, this is in the utilities section. So if it's transportation that's reasonably countable as a utility, then maybe include it. But if it's something that you don't believe falls in line with the definition of a utility, then maybe not.
Our loan is slightly greater than 2 million due to the 25% calculation. If I knew now that I will use less than 2 million, can I give back now? I would then be under the audit requirement. I don't know. So that's a good question. The only thing we know about the audit requirement is literally a comment that Secretary Munchin made in a press conference yesterday.
Yeah.
Whether or not that's going to really follow through, I don't know. Candidly, whether or not you're already sort of in it because your original loan application was for 2 million, even if you paid back, let's say you got 2.1 and you paid back $200,000 of it today. I don't know that that's going to change the fact that your original loan was 2.1 million. So
yeah, and from the bank perspective, mechanically, when we register this loan through the SBA, it goes in with an application and with a loan number and with an amount. And so I would assume in terms of records on their system, if you took $2 million upfront, that will be in the SBA system as $2 million. So even if you pay that back now, I don't think it would change the amount that they'll have. And again, this audit requirement for $2 million and greater, this is from a press conference. This isn't necessarily documentation. I would say, they have a small number of people that are going to audit as many as they can. The biggest impact will be with the larger size. Ben's gone through some of these numbers. You could probably expect a bit of scrutiny, but in theory, you'll have good documentation of your loan amount calculation and your uses of funds, and it shouldn't be an issue anyway.
Agreed. Would interest paid on a line of credit secured by accounts receivable count as an asset-backed loan, or is that a swap? So remember, the term they actually use is a mortgage, and accounts receivable are not a tangible asset, so I would not consider that a mortgage-backed loan. So I would say no. Our loan is over $2 million. What type of time period are we looking at for an audit? 90 days, 6 months, a year plus? That's a good question, and nobody knows. Our monthly payment starting on November 1st would be substantially higher if we hadn't been granted forgiveness by the payment start date. Yeah, that is an interesting question. No, we've already walked through the timeline. So you've got your loan. You've got 8 weeks to spend it. So that's basically 2 months. The bank then has 60 days, so another 2 months to submit your forgiveness application. So now we're at 4 months. And then the SBA has 90 days to respond. So we're 7 months into this thing. And yeah, we only have 6 months of deferral. So this is a great point in that you should be prepared to make a very, a substantial payment in the first couple of months of your amortization period.
Yeah, that's a great point. And banks really don't know how this is going to go. Theoretically, the bank has 60 days to review and submit the application to the SBA. I would say with how the application process has gone so far, we would definitely intend to do that as quickly as possible. That said, there is theoretically a much higher amount of time that could pass prior to having a decision, and that could theoretically exceed your payment deferral period. So maybe that's something you're ready for, but in practice, it may not actually lead to a payment, but at least on the full amount. But it's hard to say, and banks really have no insight into the time frame or process for how the SBA will be processing these forgiveness applications.
Yep.
Going back up one, I was told the money used after week 8 can be for whatever you want to do with it, pay for advertising, etc. Then reverts to a 1% loan for 24 months. To me, in the spirit of the law, the money should only be used for payroll, rent, etc., even after the 8 weeks. Your opinion? I would say, yeah, it's very clear that you should absolutely only use funds that you took from this program for approved uses, which would be payroll, utilities, rent, and interest.
You actually certified on the application that you would only spend it on those things, which is why I've said you should only, you should track every penny of the loan to document that it went to payroll, rent, and utilities and nothing else.
Yeah, definitely only use it on approved uses.
So I apologize. I did not expect that this was going to run as long as it has. I've got a 4 o'clock, so I've only got a few more minutes that I can participate in the Q&A portion of this. I don't know what your calendar looks like, Riley, but
yeah, I have a 4 o'clock also.
So I think we've kind of touched on 401ks. Maybe we can just scroll quickly. We still got, these questions are multiplying. We started with like 80 and we've answered nearly 80 and there's still 40 to go.
They are very good questions though.
They're fantastic questions and we really appreciate everyone's involvement and engagement. I will say I'm certain that there will be a part 3 of this presentation when we get the SBA guidance, and hopefully we can add some additional definitive responses to this. Again, we were hoping that we would already have that for this one, but when we get there, I think we will get something else on the calendar and try to address it further.
Yeah, I'd say that's a good approach.
All right. For those of you that your questions did not get answered, I'm happy to actually have a conversation with you. I think my contact information is somewhere in the slide deck. You know, feel free to give me a call or shoot me an email. I'm happy to chat with you and try to help out as much as I can.
Jonathan,
if you haven't caught the themes yet, the answer to a lot of these questions is, unfortunately, we don't quite know yet, but I'm never shy with my opinions.
I am going to be sending out an email shortly with the PowerPoint presentation. I'll have contact information for each of you on it included.
Perfect.
Okay, great. Yeah, again, Stella, thanks for putting this together. And then just so everyone knows, Ben and I represent two different angles on this whole program. There's banks and there's accountants. Banks' role is not to make a decision on a lot of these things. We're here to try to apply the program as consistently and accurately as possible with respect to the guidance that we get from the legislation or from the SBA. And so we're going based on whatever we see, and in a lot of cases, there's not answers. In many cases, we recommend that businesses talk to their advisors, such as their accountants or their lawyers or existing consultants. And so that's definitely something you want to try to do. Ben has been extremely knowledgeable and helpful on this topic. I'm very grateful for his input over the course of this presentation. I think this is something that's evolving. We've touched on it a lot of times. The SBA needs to release more guidance. We're all awaiting that. We expected it already. We haven't gotten it yet, but this is something to watch for. And like Ben said, we'll probably do some sort of follow-up when we have more information.
Thank you, everyone, for participating. Thank you, Riley and Ben, for your expertise. And I do look forward to having a part 3.
Thanks, everybody. Appreciate you being here.
Thank you.